This is our weekly market update where we start in the US, across to Europe and Asia, and end in Australia, covering commodities and crypto on the way. It's the digest I use to help me understand what's happening, and I hope it'll help you too, despite the fact that this show actually takes longer to make than my other shows and tends to get lower views. But it's the critical underpinning of all my work, so it's really important. And be warned, we do cover a lot of ground. This was another complex week, with waves of news, directives, trade issues, and economic data causing ripples across the market, against the backcloth of reinvigorated inflation fears and questions of whether central bankers are really as smart as they like to think. The global MSCI index was pretty flat across the week, but down 0.67% on Friday, while the European STOXX 600 rose 0.59% across the week, having closed at a record high on Thursday, helped by mostly robust company earnings, but also falling a bit on Friday. US equities closed broadly lower after the economy added fewer new jobs last month than expected, and a survey found consumers increasingly worried about rising prices, bolstering the case for the Federal Reserve to hold rates steady for longer. Wherever you look, uncertainty rules, and with so many things still in play, we can expect more volatility and uncertainty ahead. I don't think that the tariff story is over yet at all. And more broadly, I think markets are going to find the next 3 to 6 months very complicated to navigate. But the bottom line is this: higher for longer is the watchword. Rates will be higher. And that's going to put an interesting pressure on the RBA when they meet shortly. Because, of course, everybody is baying for a rate cut locally. But against the international backcloth, it may not come.